So far we have seen what really affects our cash flows. But apart from that, it's also important to know from where we get our cash, from where we get our funding, and what it should be used for. We have seen how the components of cash flow affect our positive or negative cash flows. As much as the components are important, we have also seen how the timing of these components affects us. Now, what needs to be seen is that does only the components affect the cash flow? No. It also depends, your positive or cash flows or negative cash flows also depend on the fact that how you have got your funds into your business and for what purpose you are using. So, the basic rule of getting funds is nothing but if you are getting funds in the short term, then you need to use it only for short term purposes. For example, if you are taking a bank working capital loan, then you need to use it only for your operating purposes like paying salaries, paying for material, paying for labor charges and so on and so forth. You cannot use that money to buy a machine. That's the biggest disaster. I'll come to that later. Similarly, if you are using money from a long term source, like you are getting a big term loan from the bank or you are getting some equity, then you need to use that for a long term purpose only, which could be, for example, buying machinery, buying new office space, buying new land for expansion, anything that has got to do with a long term purpose of your business. This segregation is very, very important. And why so? Because short term funds do not, if you use them for long term purposes, you will not be able to get those funds back in the short term. It will go for a long term, and that is where most of the defaults on working capital happen in case of MSMEs especially. On the other hand, if you use a long term source like say a term loan to fund something which is more operating, it is still not going to generate any income for you because you have to use your long term funds to create an asset that will generate income for you and you will be able to repay that term loan back. These two concepts, unless they are understood, people 90% of the times make this mistake of using a short term fund for a long term source and vice versa. Then you get into a big time cash crunch. These are things you should definitely avoid in the total. So, when you want to seek a loan, first understand that you need to estimate how much you need really, and the timing that I showed you will help you to estimate when and how much you need. So, if you feel that it's a short term need, you need to go for short term funds, and if you feel that it is a long term need, like say you want to buy some expansion machinery or you want to buy a new office or rent a new office, then you need to look at some long term fundings. So, these ground rules, if you remember and apply them in your day to day business, I am sure this will save you from the hassle of getting into a very serious cash crunch. So, friends, we have seen how cash flows are impacting us in our daily business, how we can compartmentalize them into different components, how we can time those components, and how the right source and the right application of money can help us, can save us from a big time cash crunch. If you like this video, do share and subscribe our channel and don't forget to hit the bell icon. Thank you so much.